Joining us today. Welcome to the Real Estate Zone. I'm your host, Mike Litton. We are dedicated to share with you all the information you need to know in today's market. We're passionate about bringing you the truth and helping you know more about real estate. Be sure to join us next week. We'll have a very special guest, Jerry McManus, team leader of our Keller Williams Realty office in Escondido. She'll be sharing with us what makes Keller Williams, and especially our office, so amazing. Joining us today is Anthony Ramirez, our mortgage expert with Prospect Mortgage. Welcome, Anthony.
How you doing, Mike?
I'm doing good, man. Thanks for being here. Hey, we're going to cover three main topics today after we do our current market conditions. It's going to be, is now the time to buy, or is now the time to sell, and we're going to do some short sale secrets to wrap up the show. As always, we want to start with current market conditions. Talk to us a little bit about what's happening with interest rates. What's been happening in the last month or so?
Well, the last month, it's really just spiked quite a bit that people weren't really expecting. The percentage of change, I guess you can say, is, we're averaging 3.5% now to about 4.5%. If you do the math on that, that's like almost a 20% increase in payment within the last month.
Yeah.
So, people really look at price, but they really got to take monthly payment into an account as part of their affordability.
Have you been seeing any challenges out there with regard to cancellations and that type of thing in terms of people getting pre-approved a couple of months ago at 3.25%, and now all of a sudden interest rates are 4.5%?
Yeah, most definitely. A lot of times what we're seeing right now is that we're having to coach people into something more inexpensive.
So a different type of product?
Different type of product, different type of property.
Or maybe a lower price property.
Lower price point, and when you're out shopping for Mercedes and you got to buy a Honda, it's a hit to the ego.
Champagne on a beer budget,
there
that
you
kind
go,
of thing.
exactly.
Makes it a little difficult.
Yeah.
Well, one of the things that I wanted to talk about specifically was in the last month with interest rates you mentioned had risen a little bit. What do you think caused all that? What do you think is causing interest rates to rise the way they have?
Well, actually, the biggest change that we saw was the government's announcement of pulling out of the GSEs.
Okay.
So as soon as they started talking about less purchasing, the market just had such a knee-jerk reaction where rates just started shooting up.
Now, just for our listeners, GSEs is a government-sponsored entity.
Right.
Right.
So basically, all the mortgages that we have, we sell on the secondary market, and those GSEs purchase those loans.
Right.
So it dictates really the interest rates what the consumer gets passed to.
Right.
So if they're not buying those loans, in order to make them more attractive, they got to put the rate up a bit more to increase that yield, and people start buying them again. So,
Is that part of this? Is that part of what the Obama administration is trying to do in terms of trying to unwind Fannie Mae and Freddie Mac?
Yeah, definitely. I mean, the other day he was talking about actually getting rid of the GSEs and making it 100% private. So
the new grand bargain.
Right. So we'll see how that works out.
Well, it should be interesting because, private money, right, and we're talking Wall Street. I mean, I know he doesn't want to mention it because it has negative tones, but Wall Street basically caused this deal. Right, exactly. And then we're going to turn around and put Wall Street in charge of promoting home ownership, like Fannie Mae and Freddie Mac has.
Exactly.
I mean, it's like the fox watching the hen house.
Exactly. And the funny thing is with Fannie Mae and Freddie Mac, the majority of the loans that we do as conforming loans, they're the ones that write the guidelines for it.
Right.
So should they go away, whose guidelines do we follow?
Right.
The next investor. And so we're going to start probably seeing some more quirkinesses into different program types, and which will probably vary interest rates a little bit more. But I mean, we may see the positive. We don't know.
We've heard something lately called tapering, and a lot of people have asked me about it. And I wanted to basically talk with you about it in terms of what you feel like this sort of, if you will, saber rattling that's going on amongst the former Fed governors and that type of thing.
Right.
What do you feel like tapering has done in terms of interest rates and in terms of bond prices?
Overall, it's really been pushing the pricing up, but what it's really done is given us a much more volatile market.
Right.
So they haven't realistically done any tapering, but just say so, and the market already pre-reacted to it. And
well, Bernanke said that they would start later this year, right? And then the market shaved off,
exactly.
And then he came back and said, well, we'll be aggressive in terms of accommodation. Right?
Clarifying his comments.
Yeah, and then here come the former Fed governors all over again. Right. And the market, the Dow lost, a couple of hundred points in 3 days?
Right.
Because
and rates went up at the same time.
And rates went up at the same time. Yeah, normally that's opposite, right?
Exactly.
Because it's called flight to quality. Money runs out of stocks and runs into bonds. And usually the price of the bond goes up, which makes the yield drop because it's inverted, right?
Exactly.
I believe the reason why interest rates are going up, and I think you agree with this, is there were a lot of people that were in there convinced that the Federal Reserve was going to stay in there. And the fact that they were talking about tapering off or starting to back up. And tapering, by the way, for those of you that don't know, is basically the new term on Wall Street for what the Federal Reserve is doing in terms of buying bonds. They're spending about on average, about $85 billion of your taxpayer dollars every month to buy mortgage-backed securities and treasuries.
Right.
That has given us artificially low interest rates.
It puts a lot of pressure on the rates, keep it
Right.
down.
Yeah.
Correct.
And so we take a free market economy and we start monkeying with it with your tax dollars.